Good afternoon, everyone. Those who are clicked into this, good to see you. And I don't know, obviously, how many members of the public are watching. I'd like to begin by welcoming those members of the public and press who are watching the live stream of this meeting via the Council's website. Members, you are by now aware of the need to keep your video camera switched on and to keep your microphone muted, except when I invite you to speak. Please click the raised hand function if you wish to ask a question or comment. Once you've spoken, please remember to switch off the raised hand function and your microphone. Dan Snowden, Democratic Services, working the technology, may also do this if you do not forget. There is always a risk that we may run into technical problems, and I would ask for your patience if we do. Should this occur, I will declare an adjournment while the fault is addressed and the public broadcast will be paused. If it is not possible to address the fault, the meeting may be abandoned until such time as it can be reconvened. Can I remind members and officers that all virtual meetings will be recorded and these recordings will be published on the Council's website. Members, I'm going to begin by calling the names of all members of the committee to establish your attendance. When I call your name, please unmute your microphone and confirm you are present. Councillor Bates, substituting for Councillor Maguire.
Present.
Thank you. Councillor Jan French, substituting for Peter Hudson.
Present.
Councillor Terry Rogers.
Present.
Tom Sanderson is not with us, I understand. John Williams.
Present.
David Wells.
Present.
And I am Mike Shallons, chair of the meeting. Right, the first item is the appointment of a vice chairman. The committee will note that I was reappointed as the chairman of the committee at the annual council meeting in May, but it is for the committee to appoint a vice chair or vice chairman or woman. I'm therefore looking for nominations for vice chairman woman, and I wish to propose Councillor Rogers as vice chair and would be looking for a seconder. Please raise the blue hand if you wish to speak to second the nomination or propose a different nomination. I've got Councillor French.
Yes, I'd be happy to second that if Councillor Rogers is willing to carry on.
Councillor Rogers.
I am very willing, Chairman. Thank you very much.
I'm delighted. Are there any other nominations? In that case, welcome again, Councillor Rogers.
Thank you.
Right,
Thank
apologies.
Thank you, members.
Apologies for absence and declarations of interest. Would the Democratic Services Manager report any apologies for absence?
Councillor Hudson, apologies. Substitute Councillor French, Councillor Maguire, substitute Councillor Bates, and Councillor Sanderson, who has not got a substitute.
Splendid. We need to come now to disclosable pecuniary interest or non-statutory disclosable interest. Does anybody have anything to offer? Thank you. I take that as a nil return, Rob.
That's right.
So the next item is the minutes of the meeting on the 28th of January 2020. We're being asked to approve the minutes of that meeting as a correct record. Can I ask any member who does not agree with this proposal to click the raised hand function? Right. Just one note from me, rather sad. At page 9, at the bottom, it says, in reality, there have been no confirmed cases of COVID yet in the UK, and it's not yet clear what the UK impact will be. How time has flown. Right. So I will sign the minutes when I'm allowed back into the office. An updated action log was included in the published papers for the meeting for the cancelled March meeting. All the actions except 2 were marked complete, and of the outstanding 2, a reply has been provided in an email from the emergency planning officer on the Brexit settlement scheme and hard to reach groups. I which I will ask the Democratic Services to read out.
Thank you, Chairman. It read, the work associated with promoting communications on the settlement scheme and targeting individuals in hard to reach groups to provide them with assistance to navigate the scheme was put on hold whilst the COVID-19 response was prioritised. However, EU exit activity has now been reactivated, and it has been recognised that some of the initiatives launched as part of the COVID-19 response are likely to prove useful in targeting the hard to reach groups. There has been significant work to target those requiring additional support during the COVID period, and the links built up in various communities will be utilised as part of the next phase of settlement scheme activity. The detail of some groups is well established and monitored, including our own Cambridgeshire Children in Care and Care Leavers. Additional emphasis will now be focused upon utilising the information built up during the COVID response and identifying where it provides the positive links to the hard to reach groups impacted by the settlement scheme with whom we wish to engage. And that ends the response.
Okay, anybody got any comments they wish to make? I'll take that as no and move on. The other outstanding action was in relation to Community Transport Action Plan, reclamation public funding. This is still an ongoing action. I can tell the meeting that I had words with the chairman or whatever of FACT two nights ago. There are things afoot which I'm not able to disclose at this stage, but the action is taking place, and I would hope that by our next meeting, whenever that is, that we have something more definite to and positive to report to you. Any comments? No. I think that takes us on, Rob, to petitions and public questions.
That's right, Chairman. We've not received any petitions or public questions on the items on the agenda in the timescales required for their receipt.
So we can move on to go to the next item, which, with your permission, I would like to change the sequence, as the external auditor has another committee meeting, audit committee meeting, starting at 4. So he's having a fun-packed day, and I intend to take his reports next, which will be items 7 and 8, with your approval. I assume that's approved. Mr. Hodgson.
Thank you very much, Chair. Afternoon, members. So the first paper that I have with you is our pension fund audit plan, which we presented to the pension committee back on the 18th of June. And it sets out our planned procedures to get assurance to be able to issue our audit opinion over the pension fund statements. On our pages 5 and 6, we set out the audit risks that we have. And for the benefit of this committee, I think it demonstrates a stable audit year, as we haven't got any changes in risk designation from the prior year audit.
Can I just hold you just for a moment, Mark, please? Are people comfortable with the page numbering? Anybody have a problem? Okay, carry on, Mark. Sorry about that.
Okay, so that would be in an ordinary year, and then clearly COVID provides an additional level of complexity in audit procedure over the top of that. And the way it is specifically manifesting itself for the pension fund audit is in the audit of investments and their valuation at the 31st of March. This is especially true for what are classed as level 3 investments, where they are hard to value because they are not on a quoted exchange, or they are specific in nature. Ordinarily, Fiona and her pension fund team would rely on an estimate, which is usually given by the fund manager at 31st of December 19 and rolled forward to the 31st of March. But clearly the impact of COVID could make that estimation hugely uncertain. Therefore, part of our procedures are to wait for the actual figures to come in, which usually come in about a quarter behind. So we're expecting the actuals for those type of investments to come in around about now before we can conclude the audit.
Mark, can I interrupt you? Many of the valuations are immediately available from the market and the pages of the Financial Times, but some of them are much more dependent on the people responsible. Are you confident that we will have enough in?
So level 1 and level 2 asset valuations are the stock market based ones, which we have certainty over, as you say. It's these level 3 ones, which are the unquoted ones, that we are awaiting the actuals to come in for. By the time we are due to sign, we are confident that we will have those. It is merely a waiting game until they come in. It is a high timing issue only.
Yeah. When are you due to sign?
The deadline is for publication by the 30th of November.
Yeah, so that should be okay. Good, thank you. Sorry, do continue.
So we are in the fortunate position that we have completed the majority of our audit procedures through our audit work with Fiona and her team via remote working through late May and early June. And that work is going well, and it is literally the valuation element of those level 3 assets plus some assurance work on behalf of admitted bodies that we are waiting to close out. Our materiality level for the pension fund is 31.9 million, and we'll be reporting to this committee any errors above 1.59 million that we find during the process. That was all I was proposing to say on the pension fund audit plan, Chair, but happy to take questions any member may have.
Members? I've got mine, but I don't want to steal anybody's thunder.
Chair, it's Terry Rogers. As chairman of the pension fund, I've already had the briefing. I know what particular questions might be forthcoming. I'll try and answer any if you might have, if the officers can't.
Thank you, Terry. Useful to have you around. I start on page now. I've got page 290 of 380, and it's the other areas of audit focus. And it says the proportion of the fund comprising of these investment types in 1819 is at around 18%. That 18% sounds quite a large figure, but it would require many holdings to be liquidated in a fire sale in order for the 18% to be realized or realistic. So I think that's a bit pessimistic. Any comment, Mark? It's your page 7, I would think, or 8 or 6.
Earlier, okay.
What is the area, the risk area of focus is the question. Is the heading. Valuation of complex investments, unquoted investments.
So I don't think we're suggesting that they need to be liquidated, merely pointing out the fact that level 3 assets, the ones I've talked about being hard to get values for at the 31st of March, comprise 18% of the total asset fund and therefore are material to the fund, and getting the accurate valuation for those at the 31st of March is clearly a key audit consideration.
Okay. Your page 13, we've got, in order to address this risk, we will carry out a range of procedures, including twice. Once is under pension liability assumptions and one is under IAS 26. Do we need both?
Yes, we do. They are different procedures.
Over the page, so that's your page 14, going concern compliance with ISA 570. The revised para 2, the revised standard is effective for audits of financial statements for periods commencing on or after the 15th of December 19, which for the pension fund will be the audit for 2021. So this is something that does not hit us this time, but is something to which we can look forward next time, when I hope not to be here.
So the new standard, as set out on that page, applies in full for the next audit period. but the implications of COVID-19 do impact on this year end and this audit, and we have asked management to do a going concern assessment for the pension fund, which will then materialise into an appropriate disclosure note in the revised accounts for approval. And that disclosure note will consider things like how the fund may have to liquidate any investments should it have any cash flow issues as a result of COVID-19. So it is a valid consideration this year.
Right.
Although for the majority of pension funds, clearly going concern is theoretical because you can liquidate the investments.
Good. Page 29, EY Transparency Report. Para 2, the most recent version of this report, which is a transparency report, is for the year ending June 30th. Is that going to be updated? Have we got one coming for this year?
There's one every year, and there will be one published as at the 30th of June 2020, yes. I
Well,
believe it is on our website.
Good. So, I mean, we're past the end of June, aren't we?
Indeed.
I leaped page, I may be in the next report. So I think that concludes that one. So what you want us to do is to note this. Am I correct, Rob?
That's right. It's to note, and if you have any concerns, but I think you've expressed them.
Questions, but not concerns at this stage. So, Mark, you leap into the next one.
Certainly, thank you. So this is the audit plan for the main county council and group audit, and again follows a similar format. So our pages 5 and 6 and 7 set out the audit risks and their designation. So first page 5 is our fraud risks and our significant risk on property, plant and equipment, and they are no change from the prior year. Of more interest perhaps to the committee are the risks on page 6, because we have increased the risk designation for both accounting for grants and the pension liability. So the accounting for grants is a result of material audit adjustments in the last set of financial statements, and clearly there would be a risk in this set of accounts that we need to gain assurance over. And then with the pension liability, this goes back to the pension fund audit, where those asset values and the level 3 unquoted investments that I talked about, they feed the actuarial model, which provides the liability that then sits on the county council balance sheet. And until we have certainty over that valuation of the pension fund assets, then clearly the estimate for the liability in the council's accounts is unassured, and we need to do the procedures over that. So that is linked to the pension fund audit. The rest of the risks are no change until we get to dedicated schools grant at the bottom of page 7. So whilst dedicated schools grant has been an area of audit interest in the last few years, the Department of Education have changed the regulations for next year, but have backdated the impact in the way they're accounted for. So how the reserve, if you like, is presented in the accounts, and if you have a negative reserve, how do you present that? So on the basis that the amount is getting towards material for us, and I'll talk about materiality in a minute, we need to make sure that the new regulations have been complied with in the draft set of accounts. So those are the risks looking through the accounts from our audit planning purpose. Then we have to overlay that with the impact of COVID-19 and the audit considerations specifically as a result of that. And there are 3 that I would draw out for your attention as members of this committee. First one around property, plant and equipment valuations. So whilst we already have it as a significant risk already, the RICS guidance, who are the professional body for valuers, have asked all their valuers to put in a standard clause in their valuation reports that in essence say that the valuations they're giving at the 31st of March are subject to material uncertainty because of the market at the year end, because of COVID. Clearly, any report that has material uncertainty in it starts ringing alarm bells in an auditor's mind. So we just need to work through what are the implications of that on the asset base that the council has, and what the valuer means by material uncertainty, and indeed what market activity has happened post-COVID in April, May, June that would give greater certainty to the valuation they have given at the 31st of March.
Do you want to give us your thoughts as to what the implications might be, or the practical effect of that might be?
The practical effect might be that land and or indeed values of assets have decreased as a result of market movements, and therefore the balance sheet valuations could potentially be overstated based on the estimates that the valuer used in their thinking and their assumptions, and that would clearly lead to an adjustment. But the valuer, and I know Tom and Michelle and Ellie and the team are working closely with the valuer, as are we. We just need to work through the timing of this and when they can get the most accurate market activity to be able to update their valuation report.
Tom or any of the other finance people, do we get a sense of which way the market's moving at the moment in this? Are values going up, down, or sideways?
Probably is too early to say. As Mark says, we're in discussion with the valuer. There's some indication, I think, in property transactions the council is involved with this summer that things are stabilising. So maybe that gives some cause for more certainty going forward.
Good, thank you.
So the second area is around pension valuations, which I have alluded to already. Until we get affirmation that the pension valuations at the 31st of March are accurate, then clearly that feeds into the actuarial model for the liability, and the two are interlinked. And again, that is a timing issue. And then the third area is going concern. And going concern from an auditor perspective is from 12 months activity from the date of the audit opinion. And as the audit deadlines and publication deadlines have moved now to the 30th of November from the 31st of July, in lieu of COVID, then clearly 12 months from the 30th of November takes us across 2 municipal years, for which there is no government settlement for the second of those yet. And clearly we need to ensure that management have done a full assessment of going concern, and indeed a disclosure note, much like I said for the pension fund, but taking into account the additional costs that COVID have potentially put upon the council and the loss of any revenue in the year and what that means for reserve balances, just to get comfortable that from an accounting concept perspective, going concern maintains the way in which the accounts are prepared. So all of those 3 areas.
Sorry, say that last bit again.
Rewinds in head. So we need to ensure that the council has done the assessment that takes the full impact of additional costs and any loss of revenue and what that means for the reserve position at the end of, well, 12 months from the audit opinion date.
Right. Tom, are you happy with that? Do you have any comment?
Yeah, well, I'll make some further comments when we've got a section on going concern in the
yes, we have
in our covering report.
Okay, right. Sorry, Mark.
That's okay. No, the 2 papers are quite interlinked, and it's just a timing issue of when you get the information, I guess. Our materiality level for the county council audit is £17.2 million, and then we'll be reporting any audit adjustments above 860,000 to this committee at the appropriate point in time. In terms of value for money risks, we haven't documented anything here because we need to complete our 2018-19 value for money work first. And again, Tom references that and the predecessor auditor work on value for money in his report and agenda item. And then by way of update, the draft accounts had to be prepared under the new timetable by the 31st of August. We received them on the 19th of June and were able to commence our audit on the 29th of June following a 2-week agreed deferral to allow those accounts and subsequent working papers to be in good order for us. And so far I can report that the on-site work remotely is going well, and I think I would say we're in a far better position than we were initially at the same point last year, 2 and a bit weeks into the audit. So hopefully that provides a level of assurance to you as a committee. And again, I'd be happy to take any other questions, both on this or alongside Tom's paper at the appropriate point.
I have a hand from Councillor Wells. David?
Yes, sorry, yeah, just coming off unmute. I had 2 questions. In the risks, you flag up a significant risk, the pension fund. What I wasn't clear about was why there was no significant equivalent risk flagged up in the pension audit report.
That's a good question. It works in a different way in the pension fund audit. So there's no liability in the pension fund accounts. It is merely the asset valuation that we're giving an opinion on the pension fund side. When you transpose that into the liability of the pension fund, that's the bit that sits in admitted body accounts, of which the county council is one. And it's why the liability is a significant risk in those admitted bodies, as opposed to the valuation of the assets being the risk on the pension fund side. So it's the equal and opposite side of the actuarial model.
Okay. And the second question was around the audit fee. I started, well, when I was looking through the county council accounts, there's a para 2.25, there's a comment that the audit fees are going to increase. But I don't see that in this document.
So in this document, we have set out the scale fee that has been set by PSAA, the regulator. We are in discussions with management about that fee because we and other audit providers do not believe that that fee reflects the amount of audit work that an audit supplier has to do to deliver an ISA compliant audit, taking into account all the required standards, the increased regulatory burden on all auditors within the sector. And therefore those discussions, as Tom references in his paper, are ongoing. So we have purely communicated the published scale fee from PSAA Limited at this point in time.
Okay, I mean, wouldn't it be more correct at least to highlight that the risk that they would be higher than that, than the published figure in this document?
I think the narrative of the table in that document does say we are in discussions and there will be an increased fee as a result of those discussions.
Presumably, if before we get to November, assuming there is some outbreak of peace, then that might be referred to.
We would have to refer to it in our audit results report. Yes.
Okay, I've read it. It's in note 2. Thank you.
No problem.
Anyone else? Could we look at page 6? You've already referred to the red risks. And Tom, I think this is one for you. Accounting for grants, there was a reference to the fact that there was some changes made last year. How confident are we this year that we will not need to make a similar range of changes?
Well, we definitely agree with EY that it was an area of weakness in our accounts last year. We have done significant work on it during the year and during the close down period as well. So I think significant improvements have been made. And we await the audit now. But I think we're confident we're in a better place.
Good, good. I leap to page 14. Our response to fraud and significant risks continued. We've got values fluctuating quite widely and wildly in the market, or what they have been. certainly since the 23rd of March and the period before. Are we going to specify a date for the valuations? Because when they're bouncing around, it depends, that to a large extent determines what the values are.
It does, you're right. And as we've referred to earlier, I think market information is coming through to valuers almost on a daily basis now as market activity picks up, and there will be a point in time where they will feel comfortable themselves that they can either update their valuation or say that there would have been no material change to that valuation at the 31st of March. The date of what that point is, I don't know, but there will be a date between now and I would say September, being 6 months after the balance sheet date, as being an appropriate period for them to do that work.
Okay, thank you. And then page 24, group materiality. We've got, for planning purposes, group materiality is set at 17.921, which represents 1.8 of the prior year gross expenditure. Where do I find that gross expenditure figure? Because I don't recognize that figure.
In last year's set of group accounts.
956
2018-19.
956 million.
Yes.
Yeah.
In total.
That does sound broadly right, and we might see that in the comparative column as we go through the group
Okay.
accounts. Yeah.
Secondly, we're being asked that the Audit and Accounts Committee confirm its understanding and agreement to these materiality and reporting levels. Members, are you with us? I see one nod, two people who seem to have gone to sleep. I mean, I would entirely understand that. A thumbs up from an enthusiastic vice chair. Okay, fine. Thank you. And then we go to the next page, which is materiality again. And so I need to repeat, we request that the Audit and Accounts Committee confirms its understanding of an agreement to these materiality and reporting levels. Do I have your approval to accept that or to note that? I've got a thumbs up, another thumbs up. Oh, this is really exciting. Right. 355, page 39. The details of the key policies and processes in place within EY, objectivity, independence, annual transparency report. This report is for the year 30th of June 2019. Presumably, again, you're going to have another one this year.
Yeah,
So
and we
that
seem to
date
have
will
lost
change.
Councillor Wells for the time being. Councillor Wells seems to have dropped out.
The excitement of approving those two.
Just to let you know.
Yeah, thank you.
It is one and the same transparency report. We only have one for the firm. So yes, that has been updated.
That's lovely. 358. That's the point that Mr. Wells has raised regarding fees. We are currently in discussion with management to agree a scale fee variation of 55,837. How would you respond to the comment that last year was year one, you had to do a whole lot of extra work, this year is going to be a doddle by comparison, we ought to reduce your fee?
So that 55,000 you refer to is the additional fee for last year's audit that we are in discussions with management about.
Right, but we've got the same, we've got some total fees here planned 1920.
So
which are unchanged from 1920.
Those are the scale fees set, as I say, by the regulator until the regulator approves that 55,000 after we've agreed it with management. Then we're not allowed to quote it in that table. So all we can do is quote the published scale fee currently. So year two audit would hopefully be a little bit easier than the year one audit, all things being equal. we're talking about two different things. So the additional fee last year was specifically in relation to the additional procedures we had to do to get comfortable, and then the scale fee discussions that we referred to in a previous item are about the base fee and its equity for the amount of work that has to be done in total to do an audit that's compliant with ISAs or auditing standards.
Thank you very much. Members, that's the end of my questions of Mark. Does anybody have any reason why we should not let him go? You'll be pleased to know, Mark, that nobody put up a hand there.
I am going to hang on for the excitement until 4 o'clock, though, if that's okay, Chair.
How do you spell glutton for punishment? Thank you, Mark. We do appreciate the work that you do, and
No, thank you. You're welcome.
long may it continue. Right. Rob, what do I do now?
You're moving back to item 5 of the agenda, which is the draft annual governance statement, pages 19 to 22 of the sequential numbering of the agenda pack.
Thank you. No. I'm still trying to sort myself out. Right. So we are asked to consider if the annual governance statement published in these papers is consistent with the committee's own perspective on internal controls within the council and the definition of significant governance and control issues given in paragraph 3.2. Have we found Councillor Wells yet? We haven't, have we?
Haven't, no.
How are we doing for quorum?
Oh, you're fine for quorum. Your quorum is 4.
I thought we might have had an early night there. Right. Duncan.
Thank you, Chair. The committee is aware that the annual governance statement actually forms part of the council's accounts. As Rob has given the page references, I won't confuse anybody by talking about different page numbers. But the annual governance statement.
Duncan, Chair, if I may interrupt, I can hardly hear you, Duncan, for some reason. I do apologise.
I will speak up. Can you hear better now?
You're mute, Terry. Duncan, continue.
Thank you, Chair. I'm used to shouting, so I will shout a little bit. Apologies if I do come across as a bit shouty then. As the committee is aware, the annual governance statement is part of the council's accounts. So it only becomes a finalised document when the accounts are audited and signed off by the council. Whilst the annual governance statement is prepared by internal audit, it is a document that is owned by the council. So ultimately, it is agreed and approved, and signatures are put on it by the chairman of GPC, the chief executive, and indeed yourself, Councillor Shellens, as chair of the audit committee. The document provides an overview of how the council is complying with its adopted code of corporate governance and, of course, governance best practice. It is not a lengthy document, and I'd summarise the key highlights. Based on the work completed, assurance exists that governance arrangements at the council are fit for purpose. That is also consistent with my annual internal audit opinion, which I give the rating of satisfactory for the year to the 31st of March 2020. The full internal audit annual report is included within the information reports circulated to members of the committee, and the extract giving my annual opinion is included within the annual governance statement, consistent with best practice. The preparation of the annual governance statement did not identify any significant governance issues requiring action. but we do highlight at the end of the document that, of course, financial pressures are ever present in the public sector. So they represent a challenge, recognizing the national picture across the public sector, but they represent a challenge for the county council. And of course, those financial pressures would be assessed as only increasing with the impact of COVID-19. So it is a summary of last year's governance arrangements presented within the AGS. And as you ably said, Chair, it is presented to the committee as a draft. And part of that process is to take comments from this committee as to whether or not that summary is a fair representation of the committee's view, given the various reports and information, internal audit updates, external audit updates, risk management updates that you have received throughout the year, that gives you the ability to assess whether the annual governance statement is a fair representation of that overview of governance arrangements in the council. Thank you, Chair.
Thank you. Any questions, members? I think my question would be, given that this is largely retrospective and we are not trying to second guess the future, whilst I understand that in the future there are storms ahead, in terms of what has happened in the last year and the systems that you've had in place, we've had in place, why have we not got better than satisfactory?
Chair, I think that is a little bit to do with the implementation of ERP in that year. As a first year's implementation, I don't have the multiple years assurance. Indeed, the external audit of the accounts has yet to be completed. So in that respect, I don't have the multiple years evidence of a stable and resilient finance system operating beyond just that first 12-month period. So the implementation of a new financial system would normally prompt me to exercise care. I certainly would not invite you to think that a satisfactory opinion is a negative opinion. It is not. It is a reassuring opinion. And the opinion above that, good. There has to be strong systems of control across multiple years that give me that stability in order to give that opinion. So I think given those factors, satisfactory is a decent opinion to have obtained given all of the pressures and the implementation of a substantial system at the beginning of the year.
Anybody want to comment? In that case, I remind you that we are requested to consider if the AGS is consistent with the committee's own perspective on internal control within the council and the definition of significant governance and control issues given in para 3.2. Is everybody happy? I see a thumbs up. I see a nod, a second thumb, third thumb, right. Okay, I think we will take that as accepted, which I think, Rob, brings me to agenda item 6.
Yes, that's correct. Agenda item 6, which is from pages 23 to 278 of the sequential numbered agenda pack, and that's the draft Cambridgeshire County Council Statement of Accounts 2019-20.
So just a small document, and the committee is recommended, so this is what we need to consider, is recommended to note and comment on the draft statement of accounts as presented. Who's leading off?
I'm going to start, Chairman. Thank you.
Good, Ellie.
Go on, Tom. Okay. So this is the draft statement of accounts for 2019-20. I'm just going to highlight a key few elements of the report. Committee are aware that the 19-20 accounts follows on from a challenging 18-19 process. And the impact of that is the significantly reduced timescales that we had to prepare for 19-20 due to the late signing of 18-19. That combined with a few system snags and the impact of instantaneously moving our operations to 100% working at home, as everybody else has had to do, mean that I think it is a significant achievement that we have managed to produce what is hopefully a good quality set of draft accounts by mid-June, albeit that was 2 weeks later than we'd actually been targeting. So I am very grateful to the team for that. As Marcus pointed out, that did mean that we delayed EY delayed the audit start date by 2 weeks. EY have been able to slot that into their October contingency timeframe. So at this moment, we're still targeting a 30th of October committee date for final sign off, and both EY and the council think that this is still achievable based on the audit work to date, which is going well. Obviously, that does need to be caveated by all of the comments that have been made so far about the COVID-19 impact and the additional challenges that that brings this year. Obviously, we're only part of the way through that work, and we don't know what the impact of that may be going forward. So there is that caveat. I think the other thing to point out is to refer to 2.26 and 2.27, which sets out the position for the previous objections and value for money audits.
Whoa. See those references again.
2.26 and 2.27 regarding the objections and value for money audit situation. So there is an update to that the PSAA have emailed us this week to say that they have spoken to BDO, who should be writing to us shortly with a plan for completion. I think that's the main elements that I want to highlight. I think Tom's going to talk you through the going concern section.
Yeah, so I'm picking up from the comments that Mark made in introducing the audit report. Going concern is an underpinning assumption that the accounts are prepared on. There's an increased interest, I think, we've seen from auditors in recent years in going concern in any case, and we expect that especially this year because of the uncertainty from the pandemic. The draft accounts already have some commentary around the impacts of the pandemic, whether that's on the valuation issues we've already talked about or the spending impact and uncertainties ahead that we set out in the narrative report. But as Mark has suggested, EY will expect the council to produce a fuller assessment of going concern for the final accounts. And these pages, which are on page 29 onwards of the agenda pack, give the committee some indication of the considerations that the council will need to go through. We confirm and repeat there the mechanisms we currently have in place for monitoring additional spend and reduced income and the impact on savings, which are being monitored by individual service committees and reported to GPC. We set out that there has been significant further support from central government announced on an incremental basis, but that does indeed at this point in time still lead to a potential deficit from the council where the consequences are higher than the funding we have available. The additional funding provided by government. We then set out under that going concern heading some aspects around the council's underlying financial strength, whether that's through the liquidity position we're in or the cash flows available to us or assets on the balance sheet, and that the council holds adequate reserves to respond to these type of uncertainties from a strong and well-established governance footing. Given there are still major uncertainties about the costs of recovery, the longer term economic impact, and as Mark said, where government funding will land next year, it's of course important that we keep this closely under review and continue to consider it. That's probably all I need to say in introduction, unless Ellie's got anything else to add, but I would just thank Ellie and Michelle and many other people throughout the finance team who've contributed to getting to the relatively good place I think we're in this year in terms of having a good set of draft accounts that's been published and an audit that's going well so far.
I have the excitement of a blue hand from Councillor Rogers, who's muted.
Thank you, Chair. I'm now unmuted. Ellie, could I refer to your comment that the powers that be have directed BDO to write to us? Does that take us any further?
That might be more for Tom than me.
My understanding, as I understand it, as I think I've been briefed, is that we're expecting great things in September. I think they're on a tight timetable. What I intend to do, I have a senior contact in BDO with whom this has been an ongoing discussion, and I intend to have a word with him and see if I can get that nailed down in type.
Thank you,
And
Chair.
I'll inform the members of the committee if and when that happens.
Thank you, Chair.
Is that all right, Tom?
Yeah, indeed. Thank you.
I still have Councillor Rogers' blue hand. I don't have Councillor Rogers' blue hand. Elliot, have you completed, or is there anything else you'd like to add?
No, that was it. Thank you.
Chairman, can I just add that Councillor Wells is back with us?
Good. Hello, David. Welcome again. Right. Well, we've got a 200 and squiggle page document here. Does anybody have any comments? I was thinking of starting with Councillor Bates.
I'll come off mute, Mr. Chairman. I'm content with what I've heard from the officers, where we are, what I call today. Next week might be slightly different, or next month will be slightly different, but I'm content with accepting the draft audit accounts as we have had them presented. And obviously I'm fully aware, and I'm sure other members are, of work which is ongoing in respect of costs and the issues that we're all currently facing in the lockdown or COVID-19. So I'm content to accept the draft accounts as laid out, Mr. Chairman. I have no other comments at this moment in time.
Thank you very much, Ian. Where do we go next? David Wells.
I don't have any comments at this stage.
Right, this is going quite quickly. Janet?
No, I'm fine.
You've had less time than the others to read the papers.
I have read the document. It was quite a bit of reading. Yes, I think I'm satisfied with what the officers have recommending. Yeah.
Councillor Williams.
Yes, thank you, Chair. I do have a question. It refers to the narrative report and page 41, where we say under investment, we make a prediction that the council is not intending to purchase further commercial properties in the near future. I wonder how making that statement in a report to do with the 1920 accounts is it appropriate, and are you not tying the council's hands to actually the future development of commercial ventures in the future? I mean, I've just wondered what the purpose of that statement serves in the narrative of the 1920 accounts.
I can come back on that, Chairman, if helpful. I think the narrative statement in particular is a commentary, I suppose, on our financial position in the round as at March, and reflecting on the year of account, as Councillor Williams says. But we are expected to cover off in that report as well some forward-looking assessment. And I know we had some comments from this on the Vice Chairman as well, and perhaps we've included more than usual on that, given the uncertainties of the COVID-19. So we will keep looking at that as we go further through the audit process. I don't think it's the other thing is this isn't new information, so it joins up with our capital programme, which the C&I committee has recommended has been through full council, that there isn't budgetary provision at the moment for the scale of property acquisition that there was in the year that we're reviewing here. and there are of course some consequences to affordability and exposure to commercial risks that do have a bearing on our position. But I take the point that we should keep considering whether this is the best forum to have reported that in.
John, you're muted. John, you're muted. John.
Yeah, okay, sorry.
Thank
It takes a few. I have an old laptop. It takes a few seconds to kick in. I wonder if this is the appropriate place to be setting future council policy. That's my comment on this.
I mean,
you never know. We may well change. I suspect we probably aren't, given the fact that we expect the government to change the rules on us borrowing to purchase commercial properties for purely financial reasons. But as I say, I'm not sure that this is an appropriate place to be putting forward future council policy. That's all my comment. I don't think this is appropriate to say that the council in future isn't intending to purchase further commercial properties.
Yeah, I mean, I have to say, I queried this point at a previous meeting. I side with John. I think it would be better if that were removed, because if somebody came along and gave us the offer of a bargain of a lifetime, recognizing that generally means it's about to collapse, but putting that aside, I would like the council to be able to move if it's so determined after due diligence and all that.
Yep. Okay. No problem. We will remove that sentence.
Finish, John, or any more? Councillor Bates.
Thank you, Mr. Chairman. I was only going to actually make a suggestion of the way forward, which I think you've covered, which is ask the officers to take away the comments which have been made about that particular paragraph and either come up with some alternative words or remove it. And I'm content with that discussion. As you know, I serve on CNI along with yourself, so we will keep a close watch on it anyway if something comes along. So that's all I was going to say, Mr. Chairman. But I think it's been covered.
Thank you, Ian. Yep, helpful point. Okay, anybody else? Councillor Rogers, I haven't asked you.
As you're aware, Chair, and perhaps the rest of the committee are not aware, we spent 3 hours on Tuesday afternoon trawling through this particular paper, and therefore what I have to say probably duplicates what you're going to say in a few minutes' time.
You're just going to steal my best lines, Terry.
No, I'm not. This is what I'm going to, provided the officers can give me reassurance that the comments that I raised, and I won't name them all because there are about 30 in total I looked at, so not to bore the rest of you. But first of all, the presentation aspects, being in the narrative and a few charts elsewhere in the programme have been modified. Secondly, we had a long discussion on the question of property, plant and equipment, and I think that was raised by our external auditor as well, and that question has been answered. The third thing that I commented on, and for the rest of the committee, was the lack of mention of Alconbury Weald within the paper, and I hope that would be addressed because I think it's a major project that we're looking at, and I would have thought something would have been said more so than was said. I think there was a one-liner in the paper.
And by that you mean, Terry, the reference to the impending move of the headquarters of the county council?
Not only that, the funds that we've already allocated and the fact that we probably might be overspending slightly because of the changes in the structure and the problems we had with the foundations, etc. I won't go into it in great detail, but there were some changes in year, so to speak. The only other point I'd like to mention, the point that you raised, Chair, if I may, and that was on the pension fund, and the comment that you raised, you were very surprised that the valuation of the Cambridge and County Bank had dropped from 81 million down to 58 million. And as promised, I spoke to the officers and I do have a reply. It's quite detailed. I'm more than willing to read it to you if you so wish, or I can send you an email separately. The choice is yours, Chair.
Well, I think that is a significant figure.
It'll take me about 2 minutes to read.
I think in that case, you should let all members of the committee know.
Yeah. As I said, the comment was raised, why the loss? I would point out, compared to the financial papers this morning, Barclays have been hit by a £3.7 billion loss, small in comparison, but therefore a larger bank. And Santander UK has already written off £5.4 million. And obviously that's because of the uncertainty with regards to COVID-19 and obviously what's happening in the markets at the moment. But basically what my officers said when I asked for this, the comment that was raised that led to that comment in that particular paper was that given the ongoing uncertainty brought about by the COVID-19 pandemic and the inability of public company analysts to accurately estimate the impact on forecast performance, we have solely considered historic multiples, being either a company's latest audited financial statements or released trailing 12-month information in our analysis. So that was from the particular auditors who basically put the price and the value on the bank. And our officers have interpreted it as such. From initial review, this appears to mean that they have assumed that the 2019 calendar year profit after tax, or PAT as it's known, of 18.5 million is the maintainable profit and based the profit related elements of the valuation on this level of profits, albeit discounted by 15%. This is in contrast to previous years when the valuation was based upon the average of the profits of the bank forecast for the next 2 years, discounted by 10%. So the actual way they estimated the value of the bank was significantly different than had been done previously. So in questioning that, was the £81 million a true value in the first instance when compared to their valuation of 58 million? And they go on to say then that this avoids using the forecast profits for 2020-21, which obviously because of COVID-19 are in some doubt, over which there is significant uncertainty. And then they go on, it also appears to put some faith in the return to previous trends over the longer term indicated by the 2023 PAT, which is what I mentioned before, and the forecast at 23.2 million on page 14, which is immaterial to the argument. So in essence, COVID-19 and the way the auditors have changed the system accounts for the appearance of a drop from 81 down to 58, Chair. So that's the response I got back. I hope that satisfies as an answer to your question.
Thank you. Rob, do you want to say something?
Can I just ask Councillor Rogers if he could send me a copy of that and I'll put it as an appendix to the minutes?
Certainly will, if that's all right with you, Chair.
Certainly.
Thank you.
Mark, as the external auditor, do you have any comment on what you've just heard?
So Cambridge and County Bank is a specific risk in our pension fund audit plan for the very reasons that Terry set out. Grant Thornton, I believe, are the auditors who prepared the valuation model on behalf of the pension fund, and that is subject to audit by our specialist team.
Do you have any reason to doubt the 58 million valuation?
I am not a bank valuation expert, but the logic behind Terry's argument would appear sound on the outset, but clearly our experts will be the ones who determine whether the range that GT have set out is applicable for this financial year.
Thank you. I mean, if I heard correctly, Terry, you said that previously they had done some figures and then taken off 10%, whereas this year they've done some figures and taken off 15%.
The other way around. The other way around, actually. That's the way I read it anyway. No, sorry, you're right, Mike. I'm sorry. I do apologise, Chair. I just read back in. Yes, you're correct.
Right. So, I mean, there's a possibility that we could have a V-shaped curve here. We may not.
I saved the final sentence or paragraph till last, which I'll read to you now. Initially, and this is head of audit officer wise, that's obviously Mark. Initially, Mark was concerned that this might be seen as a change in the basis, but I think it's a pragmatic refinement of the approach given the uncertainties of COVID. This is a very subjective valuation, and it is possible, if not likely, that no other valuer would come up with a similar value for the Cambridge and County Bank. However, I think the sizable write-down from prior years should demonstrate to the auditors, and obviously yourself, Mark, that we have looked at this subject sensibly.
Okay. Any more on that particular element?
That's all for you for that, Chair. Otherwise, any other comments on the paper, not to steal your thunder, so to speak, I'll leave in your capable hands that were covered on Tuesday.
Thank you very much indeed. Right. Anybody else got things to say before I launch into my
thunder?
No, I don't think thunder. Okay, I'm going to start then. I think every year that I've been in this situation, I said, well, this is a very funny year. And this year, well, perhaps funny is not the right word, but it is the most extraordinary year that that I've experienced, and I guess many of you as well. This reflects itself in the document in that, to my reading of the document, we have very much more of the future in the document than we normally do, and quite large chunks of it. What I would like to do is to hurtle through my points and dealing with small issues, and then come back to some more significant ones. I'd like to go back to going concern. I think we ought to have a discussion about the high block grant. I want to draw your attention to the 6% pension figure. I think I would like to just float the question of what are we going to do if we start getting negative interest rates. And I added at the bottom Cambridge and County Bank, but I think that's been done, and I don't see any need to reopen that unless you have any reason to. So with that said, I need to start. Right, we've already picked up that EY have very helpfully made are not penalising the audit timescale for the 2 weeks delay. So very much appreciated. 217 on page 27, Council's earmark reserves increased by 12 million. Can anybody tell me why? Tom?
I don't have this immediately to hand, so I don't know if Ellie or Michelle do.
Well, perhaps someone could drop me a note.
Yeah, we can have a look at that. I think part of it, but we will come back to it, but I think part of it is due to the general fund balance being topped up because we didn't have the issue this year with the underspend, but we'll come back to you with a more comprehensive note on it.
Right.
Overspend.
Thank you. Okay.
Sorry, could I add? I've just had a look. A lot of it is to do with the grant timing of the grant receipts as well, because we had the additional COVID-19 grant of approximately 15 million just prior to the year end.
Right.
So we've obviously had to put that into usable reserves.
Right. If I go to
that
point
will be the
3,
main factor.
Yeah. What have we done with that 15 million? Just dropped it into general earmark reserves.
Yeah, so at this point, GPC has earmarked it for the purposes of responding to the pandemic. And actually, we talked about it further at the July GPC that the feeling was, because of the uncertainty still, rather than allocate it to individual services, GPC would continue to hold all of that money, including the additional amounts we've received this year centrally, and kind of take a global view across the council about how that risk is best managed in budgeting terms.
Ian, do you have any comment on that? You're still mute. Thank you.
Sorry, Mr. Chairman, I'm off mute now. No, I can confirm it. I think exactly what Tom said is we are getting money from central government due to this crisis, not just on social care, but on other areas. And obviously they're being put into our reserves at the moment, and that will go forward. It is all being reported, I can assure members, and that it is all being discussed at General Purposes Committee extensively as we go forward, and I'm sure it will be another item on the general purposes, and most probably the next one and the next one after, bearing in mind things do change in respect of the pandemic, if there are spikes or not spikes, and what the winter might bring, etc., etc. So I think I am certainly confident that all the officers across the whole of the council are on top of this particular thing. Quite what the outcome of all that is, I'm afraid I don't think any of us have a crystal ball.
Thank you, Ian. That's very helpful. I leaped page 29, paragraph 3.3, and this is a general concern. The council is continually assessing the impact of 19 on our future, blah, blah, blah. And we prepare draft accounts as a going concern. In the next section, we fully expect to be able to confirm this in detail and for not less than 12 months ahead of the date on which the audited financial statements are ready for signature. Now, I'm slightly concerned about loss of control here, because this committee will not necessarily be in the position to have up-to-date information 12 months ahead of a date we can't yet predict. Tom or Fiona?
Yeah, well, I mean, indeed, this comes to the point that, in respect to going concern, Mark kind of addressed this really, that because we could be signing the accounts as late as October or November, and that needs to span 12 months ahead. It is a longer period than normal. But every year there are a number of issues where we need to make an assessment at the point the accounts are actually signed. So to some extent,
but I think this
committee will meet again in October, of course. So, and by that point, we should have the content of the disclosure note that will need to go in the accounts on this point.
Fiona? Fiona, I can't hear you.
Hello.
You're on mute.
Yep, sorry. So we have done a draft going concern, which we have.
I was after Fiona Macmillan. I do apologise, Fiona.
Okay, sorry.
Sorry, Chairman. I haven't really got anything to add to what Tom said, really. We'll have another meeting in September and October again, and then we'll just have to deal with it then as best we can.
But what would happen if there were changes between that meeting and the date of signature?
We'd have to put an alteration in, I think. We've never had to do it before, to be honest, Chairman, so I'd have to give it some thought.
If I could support you, Fiona or Tom. I think what we're looking for is for Tom's management assessment to paint the worst case scenario, and as long as the reserve position covers that sufficiently, then the going concern issue doesn't go away, but is sufficiently covered for audit purposes. And we would test that worst case position. Anything that comes through in terms of government grant that reduces that worst case position is clearly a bonus, but you are disclosing what you think is the worst case position at a point in time, as you say. So that's what we're seeking from Tom and having discussions with Tom about.
Good. I'm glad you decided to hang on, Mark. Para 3.5, looking further ahead, the policy announced by government that impacts that impacts of the pandemic on local taxation be handled across 3 years. Well, that's lovely, but it doesn't actually give us any more money, does it? It means that we've got significant cuts potentially, unless central government starts to increase dramatically the funding that it makes available to us. And I would have thought that there's a strong risk for this, and here we verge into going concern, that a strong risk that our reserves will be dramatically eroded by 3 years of negative funding. And then we're in section 114 territory, and I don't want to be alarmist, and that's obviously a long shot, but it's this county, along with many others, has not got the magic money tree.
Indeed, I think I'd want to emphasise we're not, even with this additional uncertainty, we're not approaching a section 114 situation at the moment. And as you say, there's major uncertainty about what the next wave of government funding will be and what the settlement is in totality next year. I suppose what spreading the collection fund deficit over 3 years does provide is time for the council to smooth that impact and for its local sources of income to recover and grow in the meantime. So it provides a timing flexibility, I guess, rather than extra funds overall, as you say, Chairman.
Page 34. We had extensive conversation on whenever it was Tuesday. I very much cling to the position that I would like the man on the guided bus to be able to open this document, which is hugely complicated and very large, and find out some answers to some very basic questions extremely easily. And I've therefore suggested that we have a one-page summary, and also that I found the document quite hard to move around once I got beyond the heading or the text on page 34 and asked for a slightly more detailed index. I pause for finance to shoot me down.
No, we have taken on board the point and will be adding a more detailed index at that point in the document. We've also worked with you to produce an updated one-page summary that should be clearer for anybody wishing to review it.
Thank you very much. Gosh, I am confused. Right. The next page, which is page 36, has got a couple of pie charts on it and some tables. Could Finance give me an update as to where we are on this, please?
So yes, following on from the previous comment, we have worked with you to provide a simpler version, which does not have the pie charts and has simpler versions of the tables, just at a very high level. And that it has been prepared based on the draft account figures, and obviously will need to be updated as we arrive at the final figures.
Fine, thank you. On page 40, performance against 1920 business plan, I consider 0.02 million overspend to be a dramatically improved conclusion to the year. And I think everybody involved deserves a significant pat on the back. That was a good outturn. 42, we have outcome areas and blue, green, amber, red, grand totals and so on. We have an objective of net zero carbon emissions for Cambridgeshire by 2050. And that's one of our 4 corporate objectives, and that's not referred to at all here. We've only got the first 3. And then there's a second point. It says Cambridgeshire. I'm not clear if that's county or if that's council.
So in terms of the adoption of the target, Chairman, we do reference that elsewhere in the rest of the report, and it's fair to say that that objective came in the latter stages of the year. So we need to take it away and check whether there were any relevant KPIs or not under that heading. I'd suspect there aren't any available as yet. And we'll check that point as well around. So I think it's Cambridgeshire will be carbon neutral by 2050, and I'm not sure actually whether that is the council or the county as a whole. I think there's a shorter term target for just the council itself, but we'll get the details on that.
I mean, I'd have thought, going back to the first point, that a note at the bottom saying nothing happened on carbon in the period would just get rid of my potential to ask the question. Special high needs comes on page 43, but we'll come back to that. 45. Reserves. The unusable reserves have increased by 16.8 million. Do we know how?
Yes, so the unusable reserves largely account for either a combination of timing differences and accounting adjustments. So the movement this year has related to a reduced pension liability based on the actuarial valuation, and also some valuation losses from the property, plant and equipment in particular.
Thank you. On page 47, I raised the negative interest rate, but we'll come back to that because that's a bit weightier. On page 60, in terms of financial consequences, this is COVID-19 impacts. These were minimal during the year. And again, this is one of these, well, look at it now situations. On page 61, there have been significant support to schools and other educational provision during this period from a range of services. And as the next phase begins with schools reopening, this support, etc. What are we doing with academies, or does that just apply to maintained schools?
Yeah, well, I think academies and the CYP committees covered this off in more detail. I think the working between the local authority maintained schools and academies has been very strong through this period. There's been lots of collaboration, and the service director for education's met regularly with academy chief executives. So I think there's been, you know, on a coordination perspective and liaison with DFE, it's worked very well. Of course, the local authority has got different responsibilities in relation to academies from maintained schools, but there's lots of detail that is probably beyond the scope of this meeting.
Mr. Wells, you've gone non-video. I don't know. Oh, there you are again. Good. I was just worried that you were going to be absent again. Page 71. This is where I sidle on to Terry's territory. We've got remeasurement of net pension benefit oblique liability, and it's got worse by 166 million. And I was very concerned that this would completely screw up the balance sheet. But I have been reassured that the consequences are taken out of unusable reserves and therefore leave us in the same situation that we were in beforehand. Page 73, the property, plant and equipment value fell by 118 million in the year, which strikes me as an awful lot. And investment property went up by 97, which presumably was this land. Do we know why property by PPE dropped so much?
So the loss on PPE is mainly, it's not solely, but it's mainly to do with change in valuation method for particularly our school assets. So we've moved to a modern asset basis. So instead of
changing in valuation method. Say it again.
Our specialised property. So mainly our school assets. So instead of valuing what is actually there on site, we are valuing what we would replace those assets with if, for example, they burnt down. So instead of rebuilding a Victorian school with a modern extension, we would rebuild to the kind of current standards that the DFE require. So that's basically the majority of that loss. In terms of the investment assets, that relates to the new commercial property investments that we've made this year.
Right.
So Evolution, Tesco's, etc.
Yeah. So going back to the first point, so what we're saying is that that's a change in the rules that were given to us rather than that we've suddenly lost some assets.
We haven't lost assets now, although there are some disposals in there due to academies, etc. But it's mainly to do with, and it's not that the rules have changed at the moment. It's just that we're bringing ourselves more in line with the SIPFA and the RICS guidance to value on the MEA basis, which is the recommended basis.
Lovely. Okay. My next point is on page 87, where the income tax has gone up by 6.4%. 6.5%, but I'll come back to that because that's more of a substantial discussion, I think. 88. Right, page 88, Better Care Fund. Figures of 19 million, 38 million, 35, 22, 57, and the balance is naught, which always worries me. Can somebody just talk me through how we managed to arrive at such a nice round figure?
Yeah, so there's a pre-agreement with the local NHS about how the Better Care Fund financing operates, and this is quite common in different parts of the country as well. So the Better Care Fund is just a subset of the wider health and care system spend on older people services, whether that's through community health services or through social care. And because of that, because it's not the total picture, the partners agree that any overspends or underspends happen in the elements that go beyond the BCF. So the BCF is a mechanism to make sure there is a pool. There's then all of the risk
BCF being Better Care Fund.
Yeah, and then all of the risk is held above and beyond that. And we also mentioned in the note the actual cash transfer, which the committee will see increased during the year from 15.2 million previously to 16.1. That's the bit the council's really interested in, because that's the funding that comes inbound through the Better Care Fund to the council, and the rest of it is the accounting that goes with that. Really
good. I leap to page 91, where we're starting to talk about senior employees, and I do think it would reduce apoplexy amongst hoi polloi if we had a statement right up front which said, bear in mind, chaps, that half of this is paid for by Peterborough. I think to stick it in a footnote 3 pages later is not drawing it to the proper attention of people for whom this is obviously one of the things that they can most easily look at. Looking at the
sorry, I was just going to say we are going to add a comment about the funding split between Peterborough City.
I was just going to come to that, Michelle.
Sorry.
My pleasure. Nice to think that we're in tune, in harmony here. Just quick comments. Chief Executive paid less this year. We seem to have chosen a wonderful year to reduce the salary of the Director of Public Health, but the total has gone up by 8%. And I think we therefore need to make sure that we don't hide some of the facts away. Over the page on 93, the Chief Executive of the Greater Cambridgeshire Partnership did not make any contributions to the employer pension contribution because he's not in the scheme. And then I got completely foozled by the notes that Michelle was just referring to. Immediately under that, it says post shared under a section 113 agreement with Peterborough City Council, PCC employees, and it goes on. And then there's a note underneath that which says post shared under section 113 agreement with Peterborough City Council. And the one is PCC and the other is CCC. So if anybody else is looking at that, they can rest assured that it is not unnecessary duplication, it is legitimate difference. If we move to exit packages.
Just to,
yes,
perhaps I could just make a comment on that, Chairman. So these are the differences, of course, are these notes get more complicated each year, I think, but we have looked closely at the code this year and made sure we've compiled this note in compliance with it. This is about individuals' pay, so there are variations and different reasons for variances on individuals, and one employee, for instance, is on an NHS pay scale, and there's a kind of a catch-up effect of an adjustment. And it also needs to reflect that not all of the posts on that list have existed for 2 years. So the
yes.
Director of Business Improvement and Development, for instance, the main reason that's gone up from 1 year to the next is that it was created in the middle of one of the years, which is set out in the footnotes. I should also just say that there has been an error picked up later in the account. So in footnote 1, we note that the Chief Finance Officer had resigned as a Director of Cambridge and Counties Bank on the 26th of October 2018, which is correct. Unfortunately, much lower on in the accounts, it then suggests the Chief Finance Officer is still a Director of the bank, when in fact he was replaced by a manager in the pensions team. So we'll get that second iteration where it's not corrected as part of the audit process.
I think that might be good news to one of the members of the public who communicates with us about these sorts of things. Page 95, exit packages. 18-19, we had 160. This year we had 89. The majority of them are 0 to 20,000, and then 13 20 to 40, and I imagine that much of that is due to the loss of the catering service.
Yes, that's correct.
Thank you. Wrong page. Yes, page 97 is the high needs block area, which we'll come back to. Yes, page 102, section 19, carry forward for schools. Balance at March 20 is 0, which I found, again, a worrying figure.
Yeah, it might be useful to just say something more on this and high needs block at the same time, and it links with...
Leave high needs block if you can, Tom. I just want to deal with it as a bunch later on.
Okay, we'll come back to this note then at that point, if that's...
Okay, fine. Page 104, revaluation, unusable reserves revaluation, 539 down to 471. So that's actual reserves. So we've lost best part of 70 million there. Do we know why?
Again, a lot of that is due to those reval losses on the property, plant and equipment to do with the schools MEA valuation process.
And capital adjustment account, we have lost 91 million.
That's also part of the reval loss, but there are other accounting adjustments that go through that, but it's not anything to be concerned about.
Right, leaping on to page 105. Downward revaluation of assets and impairment losses not charged to the surplus or deficit on provision of services, 157 million. Am I bothered? The upward revaluation was 3 million.
Again, that's our exact same issue about the reval losses.
Right. And we seem to have consumed Oh, revaluation gains, reversing previous losses on PP. I mean, I do find this confusing. We seem to win bits and lose bits, but we've got an 84 million. Revaluation gains has gone from 1,284,000 to 84,229,000. So that's just a huge proportionate increase.
So the accounting requirements for revaluations and the use of a rolling programme for at least some of our asset valuations means that we do have fluctuations year on year, because the revaluation gains and losses depend on the history of gains and losses for that particular asset, because we have to split between what goes into a revaluation reserve and what needs to be charged to the comprehensive income and expenditure statement. And so we have a set of rules that we need to apply, and depending on what asset it is that you're revaluing in that particular year and what its history of valuations has been, depends on where it gets accounted for.
Thank you. Right, I go to page 108, just to show that I am detail conscious. This is movement in reserve statement. The balance at the 1st of April is down £1,000 in 1819 and £1,000 in 1920. What is this, and why can't we just get rid of it? Silence.
Sorry, I expected somebody else to answer. Sorry.
Yes, me too, sorry.
So it relates to the finance lease for Castle Court. We have a deferred capital receipt in relation to that lease as part of the technical accounting requirements, of which currently, because it's such a long lease and we're quite early on in the lease, the receipt is has to be released very slowly. Further on through the lease, you'll get much larger releases of the deferred capital receipt to your usable capital receipts.
Right.
And presumably the reason it's in there is because the balance is material. So whilst the change isn't, the whole note is.
Absolutely.
Thank you. 112 revaluations. We've got a paragraph that's going to be rewritten there. Further down, we've got council carries out rolling programme. Sorry, this is at the top. Every 5 years, with all DRC, whatever that is, assets and properties with a value of over 4 million being valued every year. Could we not? How long have we had 4 million as the figure, and could inflation not have taken it further up so that we don't have to spend the money revaluing these particular assets?
Okay, so in answer to your question about DRC assets, that's the specialised assets that we have to account for using a direct depreciated replacement cost. Sorry, I get the right acronym. So that's what that is referring to. What we've actually done is, because we've in prior years had the value of assets not revalued in year being materially different than if it had been revalued, we have set the policy to revalue all of our DRC assets on a desktop basis this year, and the 4 million had previously been 5 million, but at that 5 million we were still arriving at a material misstatement issue. So we have lowered that in order to try and ensure that our valuations at the balance sheet date are materially correct.
Mark? Any thought on revaluation frequency and level?
I'm okay with what Michelle said. That makes perfect sense.
He's not prepared to pick a fight with you, Michelle. Right, page 113. This is valuation of long-term assets. I thought that the change from 56 million, then 22, 20, 56, 756 and 912 was time series of the valuations of the same things, but it was pointed out to me that it just depends on which lump of assets we're going to value this year. If I put that very inelegantly, but is the sense correct?
That's correct. So you
Yeah.
can see, so for example, London buildings, the 912 million that we're talking about there, you can see on page 77, that's the cost value, not the net book value of London buildings. So what this is showing you is how that 912 million is split across the years and which assets within that value are valued in which year or have been valued in which year.
Indeed. Right, I leap to page 122, balance sheet, supporting notes, significant observable inputs, level 2, student accommodation rather worries me, because I think there might have been a material change.
Well, that is part of the issue that we need to be working with our valuers about with regards to the uncertainty of property valuations at the year end. What we have seen had guidance from them so far is that there actually doesn't appear to at this stage be a material issue in student accommodation values falling, because it's based on rental income prospects and the impact on those is relatively short term. So therefore your value of your property is not very affected in the long term. In the longer term,
yeah. Okay, good. Page 124, short-term debtors, it's gone down from 119 to 92 million. Whilst unhappy that we've got any debtors, because I'd like to have the money in Chris Mallion or Tom Kelly's bank, that's an improvement in the correct direction as far as I'm concerned. And trade debtors have gone down 20 million, which is a very good result. I am concerned about the ability of the council to get in the money that it wants, that it is due. And Tom, I would like to have a paper at our next meeting, or possibly even circulated to members before then, if it's going to be any length of time, on the debtor situation. And in that, I would like also to have the 2 large debts that your office, I think, was handling, rather than the general run-of-the-mill debts, because they are clearly quite large. Can we do that?
Indeed we can. So I think that this committee has received from time to time that detailed update from revenues and benefits, and will include in that some commentary on those high value debtors that are either related parties or close partners. So yeah, we'll liaise with Robin to make sure an update comes through to the committee either by circulation or on a formal agenda.
Or whatever, yes. Do you want to give me a time scale? I don't want to be pushy about this, but I just want to know, I need to manage my expectations.
Well, I mean, there's constantly active work on it, so we can just provide the latest position. I do need to liaise with Robin, but certainly September or October, depending on what else is on the agenda, should be possible.
Thank you very much. 127, grant income, down at the bottom, other grants has gone down from 61.6 million to 8.4, which is a substantial drop. Do we know why? There seems to be a deathly hush.
So yes, what is included in other grants is largely driven by, so I suppose, sorry, step back one pace actually. The grant income disclosure note is in more than one section. There's 2 main sections to this on pages 95 and 96. We're required to split how we account for grants, and depending on whether we've applied grants to capital expenditure or service revenue expenditure and or REFCUS, means we have to either account for it if it's capital in the top element, or if it's been revenue expenditure in the second part of the table. So there are grants where one year we may largely apply to capital and they will be a sum in the top, and then we have to reprofile that grant in the following year and split it differently between the two elements of the table. We also have this notice prepared on the basis of showing those grants separately that were over 2 million in the current year. So we also have grants that may have been above that in the previous year and therefore separately split out, and we'll then roll those into other grants in the current year, or vice versa.
Good. And I think possibly my last comment for this section, or possibly not, is on page 129. Section 106 contributions is down 20 million in a year. Do we understand why? 51.7 down to 31.7 or 31.8.
I think me and Michelle were both going to answer that at the same time. So it relates partly, it's a similar thing to what Michelle was just saying about classification. So in part it's to do with Section 106 that we are now recognising because there is no conditions attached to them, and that the figure of that recognition is quite significant this year. I think it was something like 28 million. So that's partly why. And so instead of showing them in received in advance, we are showing them in capital grants and contributions and applied. So they're just in a different place in the balance sheet potentially. And the other reason is that just that Section 106 is variable. It depends on build out of developments when we actually receive the income, and also capital expenditure when we're actually going to use that Section 106 to fund something. So there's various reasons why that's changed.
Good, thank you. I think that gets me to the end of the authority accounts, and I'm now likely to have to poke Fiona Coates, that is, because we're going to totter into pensions area. And I start on page 147, where I have a whole series of entries against 1819, all of which are naught in 1920. And my ignorance just makes me very nervous. Do we understand why?
Sorry, which page are you referring to?
I'm on page 147. It's local government pension scheme assets comprise. And there's a total
5 of the accounts
at the bottom.
It's labelled 115 on the accounts document and 147 on the committee document.
Yeah, so it's part of the council's
okay,
that element that I spoke to you about yesterday or today, where it's our share of your.
Oh yes. So sorry, what was the question again?
Well, I'm just bothered by the sudden appearance of noughts.
So the noughts is the assets that we don't invest in.
So last year we had 32.806 million for consumers, equity instruments by industry type, consumer, and then this year it's naught.
Sorry, what did you say the page was again?
It's 115 or 147 of 380.
Oh, okay, yes, sorry. So equity instruments, so everything that was in there last year is the Schroders UK equity. But
right.
During 1920, we disinvested in Schroders UK equity and went into pooled assets in the Access Fund and various other alternative assets.
Right. So it's because we just moved out of that market area.
Yeah. So that was our segregated holdings, and now we're in pooled holdings.
Good. I leap to what page numbers are best for you? 121 or 153 of 380?
121. So yeah, the county council document. Yep. Okay.
Am I not in pensions yet?
No, you're not.
I'm not. Oh, well, in that case, county council will have to wake up again. Sorry about that, Fiona. I do apologise for causing you angst. Right.
Sorry, we would have had to refer to Fiona for that last question anyway.
Yeah.
Right. Good. on the next page, it says we need to refinance 242 million quid this year, which strikes me as an enormous amount of money. On the other hand, interest rates are at an all-time low. Does anybody want to tell me how we're going on refinancing this lot and what our strategy will be? Are we going to get oodles of boodle, or are we just going to get the minimum? I suspect this is Tom's question.
Yeah, so I mean, the profile of that that is consistent with the treasury management strategy as it stands at the moment. For some time, we've been rolling over short-term debt with other local authorities, and there remains a fairly liquid market that's enabling us to do that. So all of the refinancing that's come up so far this year, and in fact up until November, we've been able to refinance those local authority loans either by rolling them over or moving them between local authorities. In terms of longer term borrowing, we do look out for opportunities. I think we took 100 million from PWLB last year at the point that rates were very low. At the moment, there is an additional premium above gilts on borrowing for PWLB, so that option for longer term borrowing is less appealing. In the longer term, the Treasury is consulting on the arrangements for that for borrowing rates from PWLB. So that may come back as an option.
Is there nothing commercially available that is comparable?
We haven't not that it's as good as the PWLB was before or could be in future. And of course, there's some additional process around borrowing commercially that's not made it necessary in relation to our capital plans at the moment. Of course, that it is something we'll keep under review and keep looking at. The other potential avenue is the UK MBA, which are approaching issuing bonds on behalf of the sector, which we could participate in. And of course, that takes out some of the additional administrative requirements of going directly yourself. So that may be an appealing option of accessing capital markets that way.
Thank you. I go to 158, where we refer to the Cambridge and Counties Bank, and I think we've done that to death. Not that I wish the Cambridge and Counties Bank an early demise. Group balance sheet on page 166 or 130, 166 of 380 or 134. Investment properties gone up from 43 million to 143. I assume that's this land basically, plus commercial.
Absolutely, that reflects the same movement in our single entity balance sheet that you looked at earlier and commented on the same.
Thank you. And I get to page 174 where my note says end of CCC into pensions, Fiona. So if we could, and I start on which page numbering did you want?
The page number 143, sorry.
That's, oh right, yes, got you. Okay, so on 143, we've got investment income down by 11 million, which is a quarter. And we've got a 400 million swing on asset valuations, profit loss on disposal of investments and changes in value of investments. Previous year, we made 182 million. This year, we've lost 208.
Yes.
Don't know whether Terry wants to comment on that.
COVID-19 in March.
Brevity is wit, or whatever. 194. Payments to and on account of leavers, that's 162, Fiona. In 19, we had 4 million group transfers, or 4.7 million group transfers. Do we know who they were?
Yes, that was a group transfer out to Norfolk County Council.
To which county council?
Norfolk.
Oh, Norfolk, right.
Yeah.
Investment income from equities is down 4 million. Sorry, this is on page 163. Pooled investments is down by 10 million.
Yes. So at the end of 18-19, we received a £10 million dividend from one of our pooled investment managers.
Oh, right.
Which we didn't receive at the end of this year.
Right.
So
was it a one-off?
Yes.
Right. Okay. Over the page, investment assets, derivative contracts purchased written options, 138 million.
Yes, so that's the new investment made this year in River and Mercantile for the equity protection strategy. So you've got 138 million assets and 101 million liabilities for the derivative contracts.
Terry?
As a fund, what we've done is take out equity protection on our passive investment. Basically, that covers us for a loss anywhere between 10% and 30% on the market drop, which obviously it did do initially through COVID-19 and in March, and subsequently has stabilized around about -15 on the previous value. So our equity protection is holding fine at the moment, and we can cash in as and when the opportunity arises. At the moment, we haven't cashed it in because our officers and nurses advise us things are going to get slightly worse. So leave it as it stands at the moment. But that's basically what we've done. And in order to do that, we've taken out with Mercantile this guarantee, and obviously that's basically what we've put up as, I forget the word now, Fiona, can you help me out with it? It's, I'll remember it in a moment, Chair, and I'll come back to you.
Send me a postcard, Terry.
Thank you.
Right.
That's what
and does this
with old age?
Yeah, and does this, just tell me about it. Does this cost us?
Yes, it does cost us, but not as much as we would have lost, in other words. So it's paying us back at the moment.
Right.
If nothing had happened, it would have cost us, but things have happened, so we've made a gain.
Good. Thank you. This is investment income, table 13, page 163. Pooled investments, unit trusts and other managed funds down by 10 million.
Yes, so that's the equity dividend that we received from one of our investment managers.
You've already covered that one, Chair.
Good. I was beginning to get a sense of deja vu there. 195, 196. No, 197. Yes. Table 14A. This is one of these very complicated tables that I just don't understand. Spot FX contracts, 160,000, that doesn't seem to have any market value. So we had some market, we had zero in the market, we had change in market value during year of 160, and we've got no market value. And I don't understand that.
So that section at the bottom, that other investment balances, that doesn't include the purchases and sales for these investment balances. So we've added it as a comment at the bottom. So they do not add across as purchases, sales and other movements are not disclosed here, and we've just put the amount there.
Right.
But that's on the total.
I hope somebody finds that useful. Mark, if you've got a 4 o'clock meeting, you must be on the point of bidding us a tearful farewell.
It will be. I apologise for having to depart, but thank you for your
It
time
won't be
today.
the same. It won't be the same without you.
Thank you.
But thank you for your help today.
No problem.
Ignore that. 201. Yes. It looks like it must be 14C. We've got a security on page 169, and we're talking about the following investments represent more than 5% of the net assets of the scheme. First of all, we don't say what date that is.
Yep.
And secondly, we've got an entry at 4.9%, which is less than 5%.
Yes, I have taken that comment and I've updated our accounts. I think the original calculation was done on the investments of the fund, where it was over 5%, but the actual calculation is done on the total value of the fund,
Right.
which brings that holding under the 5% threshold.
Right, slightly more contentious on page 202, forward foreign currency. The fund's investment managers may enter into forward foreign currency contracts to take advantage of current exchange rates. Now that seems to me to be just gambling.
I wouldn't say it was gambling. It's the investment managers putting the protections in place on these exchange rates so that they can.
Can I help you, Fiona? As
Yeah.
we've got protection on our equity, Mike, we've also we bought into protection on exchange rates. Therefore, obviously, the movement of the dollar, where most financial dealings are done in, if that goes up and down, then we're protected with regards to the pound. Does that help you, Fiona?
Yeah.
Right, but so if I've got a £10 million dividend from Shell denominated in dollars, I'm making that up.
No, I'm sorry.
No, so
not
suppose.
Shell.
All right.
I'm just remembering ESG, please, Mike.
Amazon.
Chairman, can I just say, at what point do you want to do a break? Because I think probably.
Yeah, I'm very, very nearly finished. Thank you, Rob. So Amazon, we've got 10 million quid's worth of dividend due, and it's in dollars, and I can see that we want to secure that value of dollars in pounds. So buying that derivative, I've got no problem. But this smacks to me of, well, let's go out and have a flutter. Not necessarily against income.
Well, that's not the way we do things in pensions, Mike. I think, as you probably realise.
Well, I think
we don't invest in individual commodities. We normally invest through an investment manager, and obviously they're the ones that do what you call the gambling side, but we don't do it that way.
I mean, if it's against an asset denominated in a foreign currency, I've got no problem. But I think the wording of this one needs to be checked to make sure that it doesn't give them license to.
I'll take that away and I'll speak to the officers, the pension officers, and we'll come up with a change to the format if that's what you're looking for.
Okay.
Thank you very much. Very near the end now, Rob. Page 210, we've got, we're talking about price risk and sensitivity analysis. And there are some quite horrific figures here, 27.5, 28.0, where we could potentially lose the money. But this only matters if we have to sell. What I think is interesting is what will those figures be next year? Because I suspect that the spread will be worse.
Yes, so we will receive the figures from the actuary at the end of next year, which will tell us what the fluctuations are on the market.
And the same applies on page 183. We've got credit risk. I suspect that's going to be fairly nasty as well.
Yes, so we will speak to the banks next year on what their credit ratings will be.
On page 217, as of March 2020, value of illiquid assets was 742, which represents 24.6% of the total, as against 19, where it was 18.8. Why have we suddenly leapt up? I mean, fortuitous, but why have we suddenly leapt up 6%?
So we have increased investments into alternative assets this year. So a full commitment to IFM infrastructure, which pension committee agreed, and then additional private equity and infrastructure commitments throughout the year, which has increased that value.
Thank you. Page 219, mortality assumptions. And we're all going to live less long.
Yeah.
Current pensioners down, males down from 22.4 years to 22, females 24.4 down to 24, etc.
Yes. I wouldn't be able to comment on that because these numbers come from the valuation report, but I can definitely speak to the actuary about the difference from the 2016 valuation.
Good, thank you.
These are the actuary valuations as of 2019.
Yes.
It's already indicative to the pension fund that there is, at the high level now, another year can be taken off of a man's life as a result of COVID-19 already. So the general effect is that it's advantageous to the pension fund, but obviously not to individual members of the pension fund.
Yeah. Page 222, current liabilities, we've got equitable life has disappeared and utmost has appeared.
Yes. So in 1920, Equitable Life transferred their AVCs to Utmost. So our AVC providers now are Prudential and Utmost.
Good, thank you. That's the end of my questions on that. Fiona, is there anything you want to say that you've thought of suddenly that I've missed?
Not additionally. I've made the amendments that we went through yesterday on the accounts.
Thank you.
And then I just need to confirm some wording with managers.
Yes.
On other parts.
Well done. Good. Does anybody have an objection if I declare a 10-minute recess? The areas I want to go through, it's a convenient place to stop, are those more substantial items that I mentioned right at the beginning of my time, which is going concern, high block needs, 6% council tax, negative income, and not Cambridge and Counties Bank. So meet back at 17 minutes past. I look forward to seeing you. Fiona, thank you very much.
Thank you.
Thank you, Fiona, from me.
It's always tempting to talk about other things, and then you have to remember we're YouTubing.
Sorry, Duncan, I missed that, whatever it was.
I said it's always tempting to have a conversation in the break like we would face to face about other things, and then you have to remember we're YouTubing.
Yes, I need to have a word with you after the meeting by phone if we can manage that.
Yeah, if do you want me to give you a ring or you to ring me?
Whichever you prefer.
I'll ring you.
Okay, bless you. Rob, are we complete or have we lost anybody?
Hold on a sec. I think looks as if we've 3, 4, 5. Yeah, I think you got everybody.
Good. Well, I'll just wait for the few seconds and then resume. Okay, we're there. Thank you for, I look upon it as a warming fact that everybody's still here. And I'm sorry some of this is fairly turgid. To start with a fairly simple one, on page 87, where we're talking about taxation and non-specific grant incomes, there's council tax income has gone up from 280,775 to 299, which is 6% increase, 6.5% increase. And I thought to myself, we've never had a 6% increase in my time. And somebody was going to look at what the breakdown of the increase was. Some of it is obviously new properties.
Absolutely.
Some of it isn't.
No, in the year 1920, the increase on the council tax precept for the council was agreed at 4.99%.
Thank you.
That is the vast majority of your increase. But we did also have a 1.56% increase in the tax base, so the properties that we were receiving.
That's a big increase in the tax base.
Indeed.
Right, good. Okay, so that's, go on, Tom.
It's a fairly typical, well, that has fairly typically been the level of growth in the base, which just shows how quickly Cambridgeshire is growing.
Is growing,
it'll be
yes.
interesting to see if that continues next year or if there's a slowdown due to the pandemic.
You only have to look at Northstowe and how that's shot up in the last year. I mean, I drive through it, well, I used to drive through it to get to Shire Hall, and you know, they were throwing houses up there right, left and centre.
Right, okay, and we've had quite a few around Huntingdon as well. Okay, so that's that explanation, very straightforward. Can we deal with going concern? Can anybody tell me where that paragraph is? Because I stand no chance of finding it in 380 pages. We dealt with it with Mark, but he was dealing with it from an accountancy point of view. Whereas what I'm concerned about is how we're doing and how we're going to do.
Yeah, so the most detailed commentary at the moment on this is from page 28 of the agenda pack. So it's outside of the draft accounts, and we've included that commentary within the covering report. What you'll see, and that really relates to the area I kind of introduced in introduction. What we'll see in the final accounts is that this there will be a specific disclosure on this in the final accounts. Did you have specific questions, Chairman, on kind of
No,
pages 28 or
it's
29?
just I'm generally concerned about it and how we're going to dig ourselves out of this.
If I may come in, Chairman, if that's all right with you.
Yeah.
This raises an issue I mentioned on Tuesday, and I remiss I didn't send that email to Democratic Services, as I said I was probably going to do. But when we're told that we have to stick to particular items to address at these meetings, we miss out on what I would call the general knowledge of the council. I mean, the Integrated Finance Monitoring Report, which was looked at by GPC on the 14th of July, dealt with 13 very important issues. And except for perhaps Councillor Bates, I don't think any of the other members here could actually address or even guess at what those 13 issues were. The other one is for example, looking now at Duncan, how has Duncan managed during this very difficult situation? I mean, I know there's an internal audit progress report which has been published, and we supposedly all have read it, but we're not, as a committee, addressing it, if I may put it that way. And the other one is the internal audit draft annual report. Again, that's been sidestepped and put to one side. And I think that as an audit, council audit committee, audit and accounts committee, we're not well informed on what's happening in the background, so to speak. And I think the question you're raising is very important, is where are we going to? But without this background knowledge, it's very difficult for some members, and particularly myself, where I'm not into the non-financial aspects of the council, keeping up to date, especially away from all the members who are. So that's my particular feelings on this, if that makes sense to you, Chair.
It's something I very much sympathise with. Anything specific about the particular issue of going concern?
Oh, yes. What I know, we're looking at the account side, but I mean, looking at children, looking at adults, looking at transport, looking at highways. I know GPC are addressing all of these, but we're not discussing them, quite rightly, because we're not in that particular thing. But it's something that I think we should be kept informed on. But that's my own particular view.
I mean, if I go to page 60, we've got the table there. If I hold it up, that one, which we've seen before. And that says we've got to lose another 66 million by 24-25. Now, I mean, we've been saying for years there's no fat left on the bone. And B, that's before COVID.
Yeah.
And that's before Brexit. And I just don't see where it's all going to come from. And if we've got to take 65 million out of existing services, the mind boggles.
Yeah, I think there's two bits of context I might add around that. The first is that this, as you quite rightly say, it's before the impact of the pandemic or any impact from Brexit. The main uncertainty the council has, I think, is where obviously the comprehensive spending review's been delayed, and there isn't a sense of what will be in the local government finance settlement, I suppose, or the progress that's being made with the funding reform. So I think we say in the report that we haven't made any assumptions in our medium-term financial strategy around an upside to this council from funding reform, but clearly that is something we're lobbying for, and suggestions that shire counties with social care responsibilities have been underfunded in the past and could benefit. The other thing is that 5-year estimate, actually 65 million is concerning and will be a significant challenge, but those 5-year forward plans have in the past exceeded 100 million. So in comparative context to the previous years, there's more financial sustainability for the council going
Well, I think
ahead.
it was 32 million last year, wasn't it, or something like that?
Yeah.
And the trouble is that if they try and ramrod through, and I appreciate that I'm on video here, but if they try and ramrod through unitaries, it doesn't actually provide any more money. It provides additional setup costs of very large quantity, and you just get rid of a few councillors. So I'm not sure I can bring this to a conclusion, but we are dependent on the government.
Perhaps, Chairman,
Go on, Tom.
Well, I was just going to add a little bit more to to give the gist of the information that's gone to GPC, to pick up Councillor Rogers' point. So the full report is linked from either page 28 or page 29, but as it stands at the moment, we've received 29 million in unring-fenced grants to support the pandemic response, and there's a whole series of further kind of ring-fenced grants, whether that be for active transport or funding directly from the NHS to support hospital discharge, or for infection control, or test and trace is the most recent one.
But nothing I've seen
and at the moment,
nothing that I've seen suggests that we're going to get more than we've spent.
Well, and that's the GPC report goes into a bit more detail on that, because we've got two different methodologies really for looking at the forecast position. One that anticipates the full longer term impact where we've got a significant deficit, as you suggest, and another that looks very much at what's happening now, and that is actually that demand in children's services hasn't risen yet, and in adult services it's actually gone down, and the NHS are paying for more people. Now you quite quickly get into, well, we're spending less now, that's less on prevention, that's going to have a much more sizable impact longer term, but there's a lot of work already underway looking at business planning for next year to see where those trends go, and yeah, it's just unprecedented uncertainty. But what the council has got is its general fund reserve and a sizable balance in the transformation fund, which will be reassuring to external audit when they look at going concern, because once we've exhausted all of those grants, there is then flexibility through those reserves and the buoyant council tax base we've talked about as well, that put us, I think, in a better position than many councils are in.
Comparatively, compared with our statistical neighbours, or even all county councils, where do we rank?
Yes, yeah, so Society of County Treasurers, in terms of the pandemic picture, have done some benchmarking with Grant Thornton, and we came out absolutely on the median for that in terms of the additional costs we were expecting. Some variances at service line level, but that was quite reassuring overall, that the costs we're anticipating seem to be in line with the sector. I think it's still true to say there are, so two of the biggest uncertainties for county councils at the moment are a potential impact on home to school transport in the autumn. We're not quite sure how that's going to play through yet, and then the local taxation input, because that billing and council tax and NNDR are managed by the districts. We're a step away from that, so that is a major uncertainty for all county councils.
But what I heard you say, and correct me if I'm wrong, is, I mean, I'm finding this very helpful, I don't know if other members do, is that we were at the median in terms, and I think you said in terms, or you gave the sense of in terms of income received. My question was really, we've got 20 million in transformation fund, we've got 17 or 96 million, whichever the figure we use is. Where do we compare in terms of how resilient we are in terms of facing 114 compared with everybody else? So it's not the not the increase. It's the
so I should clarify that we seem to be in a medium position for our expected additional costs and lost income as a result of the pandemic. The question on financial resilience is interesting, because Cambridgeshire, compared to other county councils, has a low level of general reserves. So the policy that we stick to in the MTFS is to keep a 3% balance in general reserves, and you don't really see any other councils of our size and risk going below that. So we are at the lower end in terms of reserves, although I would still say they look sufficient compared to the risk that we're facing. But what the other thing it's important to add is we have got a strong track record of sustaining reserves at that level. So what is often of concern to central government is where they see councils burning through their reserves, because they're then spending more currently than they can finance, and we don't have that issue. So that we've been able to rebalance reserves, and as you said earlier, Chairman, the outturn last year was just 0.2 million. So
yes, very
we're
good.
in a good position from that resilience perspective.
Yeah. John, any thoughts from South Cambs? John's
no, not
finance at
Not
South
really. I
Cambs.
mean, South Cambs is also in a very strong position, and we have quite high level of unearmarked reserves, but so far we've avoided having to use them, and don't expect really to use them. But I think next year the big issue is going to be council tax and business rates, and we've already seen business rates collected down about 20%, and council tax, now we're coming towards the end of the furlough period, starting to arrears starting to rise. So we're looking at around about 10% probably default on council tax. So they're the big issues for next year going forward. But this year, yeah, we're probably okay. No, we are okay, actually. We're probably okay. And I can see what the county has done, and I think it's covered its back really quite well. But next year is going to be the killer, particularly for the county, who obviously take the lion's share of the council tax and the business rates. And yeah, but obviously modelling's going on. It doesn't affect what we're doing at the moment for obviously for the current accounts, but yeah, everyone's going to be looking to make some severe cuts unless there's support from central government for next year.
And I see we have a special vulnerability in that they can say to us, well, you've just got 130,000 or 33,000 acres, just flog a bit. Is there any sense that that might be in their thinking?
I don't think so. I mean, I don't know. Tom might have a different view of this, but I don't see that at the moment. I don't think the government has been looking at people's assets and saying, well, you've got these assets, you ought to sell them. But we are facing a difficulty with commercial. Obviously, the government has indicated it's going to start restricting what we can borrow money for, not just from Public Works Loan Board, but from any sources of borrowing on commercial property. And it could well be that we could be facing some very tight restrictions on what we can borrow money for going forward, which would affect our commercial income.
Right. Ian, is there anything you can say without breaking confidences?
No, I was only going to suggest we could spend the next hour on this issue, and I don't think we have the time to do that. Next year, and we've got some way to go yet. All I would suggest, picking up, I think, Terry's original point, maybe something for Tom to discuss with Chris Mallion about how things are reported that go to GCP, where it is extensively discussed across all parties, okay, and how that feeds in to this particular discussion and this particular debate, okay. But at the moment, I've said it once and I'll say it again, I don't have a crystal ball today, and tomorrow's another day, Mike. So I think for the moment, we are, I think as John has just indicated, we are in a reasonable position. It does actually reflect quite well at the moment with other organisations, but I'm afraid, you know, who can tell what might happen in a month's time, Mike.
Yeah.
And I'm not going to get into the unitary debate, okay, here, and that's another completely issue. But if you can save 4 or 5 chief executives and 151 officers, of course, along with others, you can save yourself quite a lot of money. Don't save yourself a lot of money with councillors because we don't have a salary per se. So, but I don't think that's for another day, absolutely. And Buckinghamshire, of course, have just finished and introduced unitary authorities in Buckinghamshire, and so has Northampton and loads of others, of course. So I think it's time to move on, Mr. Chairman. Apologies for
No, I have no problem with what you've just said. So if we take Ian's good advice and move on to high block needs or high needs block or whatever the language is, how have we got into this mess? It's 16 million over, and how are we going to get out of it? And Tom, I'm now expecting you to produce a hat and a rabbit.
So for the committee's reference, this is most clearly set out on page 97 of the accounts. Yeah, in the interest of brevity, I guess the short answer is that we receive less funding for meeting the needs of children with additional educational needs in schools and other settings than it is costing us to provide those services. There's been this is a national issue. There's been extensive reform and changes to the way that education, health and care plans work. There's at this point in time, we've got a recurrent deficit on high needs block of somewhere in the region of 11 or 12 million, and we are, in accounting terms, we're quite restricted with what we can do with that. So we explored a number of routes during last year with Schools Forum and the Secretary of State, looking at block transfers from either mainstream schools or looking at reductions to special school budgets. And those avenues were closed off for various reasons. And the regulations that Mark Hodgson referred to mean that the council can no longer subsidise this area from the general fund. So the solution is twofold, really. Firstly, the council needs to take all the steps it can from a management perspective to bring to take demand management actions that bring expenditure more in line with funding. That will take us so far, but clearly it won't wipe out all of the recurrent deficit or the accumulated balance that we have, and that you can see there, the 16.6 million carried forward on page 97. And for that, we need further support from central government. We know there's money allocated to education looking ahead, and we'll be making the case that it comes to the high needs block.
Yeah, but they haven't solved it so far, have they? I mean, this has been a problem for us for a number of years, and they've been deaf.
Yeah, I mean, there have been additional allocations to the high needs block every year, but it hasn't kept up. That's fair to say. We're just currently looking at preparing a briefing note and which particular lines we think are worth emphasising most at this point in time, to make a representation to MPs to raise this with central government as well, because it is a keenly felt issue locally.
Yeah, and presumably cutting down on the numbers that we support in this is not a popular course for the parents affected.
Yeah, and I mean, it's not all just about numbers. There's a range of measures. So we have successfully negotiated with secondary schools an efficiency on behaviour support, which is more about the money that's then devolved to schools than the number of people supported through individual packages. But there are other areas where we would need to consult, and that's had to be paused currently because of the schools aren't open in the normal way.
Anybody else got any comments? I mean, are people as concerned as I am about this? Do they see this as an issue, or is it just stuff that gets lost in the arithmetic and the decimal points?
So I think it's one of many issues, but it's an important issue.
Okay, I don't think we can take that any further. Negative interest rates. Tom, I raised this at our meeting a couple of days ago, and you went away to wrap a wet towel around your head and think about it.
Yeah, I think this relates back to the conversation we had earlier in the meeting about treasury management and our exposure to short-term borrowing. Overall, the council borrows more than it invests. So generally speaking, the lower interest rates are, the better it is for us from a treasury management perspective. On our investment balances where we hold cash, for instance, interest rates are already very low. If that switches over into negative, it actually won't have a particularly consequential impact on our treasury management position, and we'd expect borrowing rates to come down to offset that potentially as well. So I don't think there's too much more to add.
Could we borrow any more to get rid of the rest of the tail of that table, which started with 241 million to be refinanced?
Yes,
and could we do that at beneficial rates?
Yes, as I say, we're constantly looking for opportune moments to borrow at the most beneficial rate to spread some of that debt out over a slightly longer term.
Yeah. Again, anybody want to say anything? No. That's the end of my list, unless anybody's got any. Has anybody got anything else that they think we ought to know? Deathly silence. You all want to go. Okay, well, in that case, I'm extremely grateful to you for sticking it out. I think we've covered a huge amount of ground. I was quite pleased with the stance of Mark, which suggests that it's not going to be too difficult. I mean, obviously he'll have to find a few things just to justify him, but that seems to be going well. We've got some substantial problems, but given the 0.2 million pounds deficit last year, one hopes for great things for this year. And I bid you all good night and a safe journey home.
Chairman, just do you want to just at least look at the forward agenda plan? I believe it's as set out with the addition of the debt management update you'd like, and I think what Tom was saying, that would come to probably the September committee meeting.
Well, I think actually, now you remind me, I don't think we ever agreed the note on the main accounts, did we? Statutory.
Well, yes, you've got to agree that, yes.
Shall we agree that? Yes, good, thank you. We agreed that. And Rob, anything else you want to say with the forward?
No, I think I've said it now.
Good, thank you. So with that addition, any further reason why I should not kiss you all goodbye?
Well, there's no any other business, so I think it is the end of the meeting.
I am extremely grateful to you all for sticking it out. I think we've covered a lot of ground, and I'm going to go. And good night to you all.
Bye.
See you all. Bye.